Everybody wants to know, will the economy boom or bust in 2024? So this week on the show, Phil and I will explore some options and some things that may or may not affect that. This week on Phil's Tax Hacks and Other Retirement Facts. Welcome into Phil's Tax Hacks and Other Retirement Facts with CPA and personal financial specialist, Phil Putney. Now let's get rolling with today's show. Hey everybody, welcome into the podcast. Phil and I back once again to talk investing, finance, retirement, and the economy. Will it go boom or bust in 2024? Got my partner here as always chatting with me. What's going on, Phil? How are you, my friend?
Doing good. Wrapping up the month of January here. It's hard to believe. Already
I know, right?
1/12 of it away. So it's gone. Boom. On to the next month.
Flying by, that's right. You know, it's funny. So we got this new setup. If you're checking us out on video, it's not really new. I just moved my lights around a little bit, but it's all, it's like, oh, nice. I got the cool colors.
Lights going, yeah.
And then you got the nice warm earth tones. Yeah. So we're, polar opposites there. But that's okay. It's fun. It just makes for fun.
That's right.
Fun
I guess your colors are a little bit more appropriate for the season. At least the weather we're having. Snow's back again. We get rid of all our snow.
Okay, there you go. So there you go.
I'm hoping for the warmer weather. So that's
yeah. When I redid my studio, I just did everything in gray and white and black, which it's nice. I like cool colors, nice, just cool tones, right? But but it does look a little different than an office setup, which obviously you're at your office, right? So. But let's talk about this 2024 thing, right? So we've been hearing about it for 2 years now.
Yeah, I think everyone's probably sick of hearing about it.
that we're going to have a recession, and there's still conversation. We'll see. So I got a couple things I want to do. I want to go on this, Phil. So I've got we got a couple of big sections. So we're going to talk about the housing prices. We'll talk about chance of recession, and then we'll talk about the stock market. And I've got some different stats here, a couple of things. So I'm kind of going to do like the optimistic take from a few prognosticators, big word, right, out there.
Prognostication,
Yeah, and then you give me kind of your opinion and, just kind of what you see and things of that nature, okay? So we'll kind of look at the optimistic and the pessimistic view. Yeah?
Sounds good.
All right. Housing prices. Let's start there. Newsweek article from a Lawrence Yoon, chief economist at the National Association of Realtors, the NAR, believes that a housing crash is out of the picture now for 2024. With the prices being high and the rates being high, we've definitely been hearing about that for a little bit. He kind of feels like that maybe now it's not going to happen. So, I mean, that seems like to me that's a good news. But what's your thoughts?
Right. Yeah, I don't think we're going to see a 2008 type crash. I mean, there's if you look back at history, why that took place and where we were at then.
Oh yeah, all the interest.
Yeah, I mean, there's so many different contrasts between where we're at today and then. I mean, number one, interest rates at that point were high. We were kind of riding them down. A lot of defaults happened because interest rates were higher. People got overextended mortgage. I mean, that's really kind of I think the catalyst of 2008 was the whole structure of mortgages at that point. People got way over their skis. Was easy to do, in housing. So as soon as things started to turn, housing, prices collapsed and it just snowballed because now built inventory. And if there's big inventory, that's detrimental to house prices, right? Where we're at today is a totally different picture. I mean, we've ridden out of this low interest rate environment. So people have had years to refinance and get into low interest rates. So because of that, people aren't selling. So inventory is still really low.
Yeah.
So we don't have that surplus of housing out there that's causing house prices to fall. Now, we have seen it fall.
Sure.
But I mean, I think you got to put it in perspective. I got an interesting article. I get information all the time, so I'm always saving in on different things. Housing is one of them I'm watching all the time.
Right.
But an interesting chart just looking at the median house prices, and this one goes back to 2014.
Okay.
But from 2014 through 2020, 21, you kind of get this slow, steady growth, ebbs and flows here and there. We all know what happened in the pandemic. I mean, it slowed early on, but then it shot off like a rocket, right? So, I mean, if we look at, and you can't see the chart, but just looking at it. So at the bottom of 2020, mid 2020, the median house price was $320,000. And putting that in perspective, at the high in 2018 on this chart, it hit 340.
Yeah.
So it had dropped a little bit. By end of 2022, the median house price was 480,000, a 50% increase in median house price. So yeah, I mean, I liken it to a pressure cooker, right? I mean, it's built this steam, so it's got to let some of that off, and it has. So now median house prices dropped down to 420. So still, I mean, not a crash by any means. It's lost, 10, 12, 15%, but and I think that's what you're going to see. But I would tend to agree from the more optimistic standpoint that I don't think you're going to see necessarily a crash
Well, even the
at this
pessimistic side.
stage.
I was
So
gonna say, even the pessimistic side, Phil. Places like
right, they're
Redfin and Realtor.com, they're only talking about a 1% decline or even a
right.
1.7% dip. So even that's
Kind of
not.
a sideways
It's
market.
it's more
Yeah.
like flat, right, than anything else. Yeah.
Although, I mean, the interesting thing, because I looked at those articles too, is
Hmm.
if you look back at their predictions for 2023 early
Hmm.
on, and even like halfway through the year, I think it was Zillow was still predicting like a 10% growth,
Yeah.
or 6% growth or something like that. We ended up with a
Right.
10% decline during the year.
Yeah.
So, I mean,
Yeah.
I don't know how much faith they really put in what they have, but at the end of the day, yeah, there's still, I think, some consensus all along, even on the optimistic and pessimistic side. There's not like, two opposite ends of the equation, one saying
Right.
a
Right.
50% decline in the market.
Right.
Kind
Right.
of the worst case scenario they're thinking is pretty much a flat market.
Yeah, I was going to say
So,
the consensus seems to be that it's going to be fairly flat,
right,
overall, which usually if you get kind of opposing viewpoints that are fairly in the middle, that's probably where it's going to fall, somewhere in that
right,
neighborhood.
right.
But it's an election year, so you never know. That can change
Yeah,
everything
they're
too.
all,
So,
yeah, all that changes everything.
yeah.
So,
Well, so let's talk about chances of a recession in
sure.
2024. We'll move to this one. So this one actually, I've got the optimistic and the pessimistic from the same person. So
Okay.
this again is kind of in that same middle ground boat. So we'll debate this and discuss this a little bit. Right here in my backyard, North Carolina State economics professor Mike Walden, he says, I think that's going to be two different economies in 2024. The first half going to be a little tougher. We're going to see some challenges. And then the second half, we'll see some rebound and some growth and so on and so forth. And so the tale of two economies in 2024, which does kind of sometimes fit with presidential election years as
Right.
well. So it's
Yeah.
kind of interesting. So rough first half, which I think we've seen some. And
Yeah, I mean,
then,
it's kind of sideways, a little volatile, which, I mean, in
yeah,
earnings season, that always happens, right? Did
okay,
companies meet or, disappoint in their earnings? I mean, it's, yeah,
right. Earnings
always
season.
plays into
Yeah, I like that.
that emotional side of the investing. So,
Yeah. So do you kind of agree
uh,
with that? Do you think we'll see a rougher, first 5, 6 months and then it kind of picks
yeah,
up
I
in the
mean,
second half?
that's pretty typical. Usually, I mean, the first part of the year, a lot of times still bleeding off from that Christmas rally, but then it gets rough in the kind of the end of the first quarter into the second quarter. Third, fourth quarter typically do pick up, and especially in a presidential election year, very typical for economies to be a little bit more robust then. I mean, the incumbent candidates always doing what they can to make it look good and keep the economy going because that's part of what they get judged on, frankly, from an election. It's just not fair. It is what it is, right? I mean, they have some control, but not always as much control as you may think, no matter who it
Right.
is.
True.
So,
True. Yeah.
but yeah, I mean, I think it's going to be, if I had to guess, I would say it's probably going to be a volatile, somewhat sideways year. So maybe, to this economist point, yeah, we might start out a little rough, lose some of the momentum we had, but then gain some of it back. But I don't expect it to be a big recession either way. And I mean, I follow this whole, soft hard landing. I've got one economist that I follow that they've got a whole, rating system on like 6 different indicators of, is it going to be a hard or soft landing? And so far they've all been green for soft landing. One of them recently turned red, so I mean, I think it's going to be just that kind of a choppy year. So.
Well, let me ask you for the listeners out there and for folks, we hear terms like soft and hard landing. If you're not really familiar with that, just what is that real quick?
Yeah, so I mean, it really, coming out of this inflationary environment we've been in, the Fed's trying to slow the economy down, taper inflation down,
Right.
and so hard or soft landing is okay. That's a tough call, right? With the interest rates and how quick they raise them, So a hard landing would be they've put the brakes on too hard,
Mm-hmm.
and the economy crashes quick because of it, right? So they've
Gotcha.
slowed the economy down too fast, and it
Okay.
comes down a lot quicker than they anticipated.
Okay.
Soft landing is they're able to land it soft, right? They're kind of pushing those brakes on, with those interest rates hikes now that they've done, and now they're talking about cuts, and so the cuts is, trying to slow down, or how do you put it? Slow down the pace of disinflation and economic decline,
Okay.
to help with soft land. So
All
that's
right.
really the concept of a soft landing is, they need to slow the economy down so the inflation isn't there,
Mm-hmm.
but yet they've got to be careful because if they slow it too quick,
Yeah.
now all of a sudden we get into a
You lose the
recession. And it
momentum.
could be, you lose that long-term momentum, right?
Yeah, I
So,
got you. Okay, cool.
yep.
Thanks for clarifying that for everybody.
Yeah. And I
Yeah,
mean,
because we
just,
hear.
the reality is if you look at this whole concept of recession, I mean, I think most people know and realize this, but I
Right.
mean, technically, so there's a lot of definitions of recession. Probably the most common one is 2 consecutive quarters negative growth of
Right.
the economy. And we hit that in the first part of 2022,
Right.
but then third and fourth quarter we popped back out of it.
Yeah,
So I
and
mean,
that's
that
that's
was like
when.
a real mild, if
Yeah,
technical recession.
and that's
So
when we
maybe
got the
we'll have
political
something like
debate.
that again. So yeah.
Yeah, we saw that political debate, right? Because then they started trying to redefine the terms of a recession because they didn't want to admit that there
Right. They
was
didn't want it
one.
to be yeah,
But it's
exactly.
like, but
So,
it's only 2 consecutive quarters. Not, it's not like it was a prolonged recession.
right.
So yeah.
Yeah. You look at
Okay.
more traditional long-term recessions. Yeah. Now it's a little bit longer than just those 2 quarters. I mean, that
Exactly.
just
Yeah.
barely met the definition. And putting it in perspective, okay, the worst quarter in those was negative 2%.
Yeah. Well, to your
So
point
that,
about trying to be voted back in based on your economy or whatever, that's, let's
right.
not throw that out there, especially the heatedness that we have going on between these two particular candidates
Yeah.
and everything else. So,
Yeah. Well, I mean, every president does it. It's just, it is
yeah,
what it
they
is, right?
do. Yeah.
You know how it works.
Yeah.
That's part of what you get judged on. So
Yeah.
it's, hey,
I feel
it's
like
not
these
natural
two,
to want the economy to grow.
yeah. I probably get in trouble for this, but I feel like these two, this is like the geriatric political version of the Thrilla in Manila, with George Foreman and Muhammad Ali.
Yeah.
It's like these two guys keep going, or even the Muhammad Ali and the Joe Frazier, three times they fought. And it's like, it just seems like these two guys just really dislike each other. It's not even just for the
Well,
job either, but it's
yeah, I mean,
just
they're opposite ends of the equation for
opposites of the
sure. It's
spectrum. Yeah,
just
for sure. Yeah.
crazy.
All right, stock market. Let's see, 2024, the stock market. So again, the Fed in December of 23 said we're gonna probably cut some of the interest rates
Right.
for
So
that.
just drove the market crazy.
Drove the
So
market crazy for that soft landing that you were talking about.
yep.
And then it got a little rocky when we got into January here as well. We're just getting ready to wrap January up at the time we're doing this. But the optimistic side here, we got CEO Jay Hatfield of investment firm CEO, excuse me, says things are looking pretty good for stocks in 2024. And, he says that there's a positive outlook out there that we think is going to spark positive territory. Now, it's an investment firm. Of course, he's going to say that because he kind of wants
Right.
people to do that, right?
Right.
But let me give you the pessimistic, and then I'll just let you have fun with this. Then old Harry Dent, if you're not familiar with
yeah.
Harry Dent, and I know you are, but a lot of folks
Chicken
out there.
Little. The sky is falling.
It's always do. This guy's what's called a perma bear, right? He is always in the doom and gloom. He says, I think this will be the single biggest crash we'll see in our lifetime. So pretty polar opposites here. I think positive. I think it's going to be a pretty good year. And then the single biggest crash ever. I think that's probably a little too extreme, but who knows?
Right. Yeah, I mean, similarly, we're talking about housing, right? I mean, although there it was the extremes are a little bit closer. So it's interesting. I mean, there's always companies out there making their predictions for the year. Where are we at? So, and it's always based on the S&P. That's kind of thought of as the stock market. So for some perspective, right now, I think we're sitting right around 49 something, for the S&P. And looking at this one article of all the different firms out there and them giving their projections of where they think the S&P is going to fall this year.
Right.
So the range was 3,300 to 54.
That's a range.
So I mean, that's a huge range, So, and there was a lot of them that were right down the middle that are basically saying it's going to be around 39, which, okay, that's where we're at. So it's going to be kind of a flat year.
Right.
So, yeah, I mean, look, we definitely have some headwinds. There's no doubt about it. Inflation, even though the Feds have done their best to try to slow it, they have. I mean, it's not where it was
Yeah.
by
Right.
any means, but it's nowhere near the target that they want.
Gotcha.
So my concern with it is the stock market always prices in ahead of time what they think is going to happen, which is what we saw in November, December, right? I mean, the
Yeah.
Fed started talking about we're not going to raise rates, and they didn't, and then hinted at, in 2024 starting to cut, and that's all the market needed because it's like Yahoo, here we go. The Fed's going to step
Yahoo!
in and save us and start cutting these rates because I mean that
Right.
can be a detriment to the slowdown in the economy and the markets.
Gotcha.
So the
Okay.
challenge becomes if this continues, interest rates don't, or I mean, inflation doesn't cool even more, if it spikes back up and the Fed has to, even if they just a continued pause, well, that's not what the market priced in. You're going to see some natural, pullback from that because they've already priced in, these Fed rate cuts. So,
Gotcha.
I
Gotcha.
mean, similar to what we talked before. I mean, I think it's going to be a little choppy.
Yeah.
There's a lot of emotions built into that pricing already. A lot of or optimism of this
Right.
is, the Feds are going to step in, start cutting rates. The economy is going to be good. It's not going to take much to play into that to make that market pull back a little bit. But
Well, let me ask you a final quick question here. We'll make this fairly quick. But do you think that more people, especially this year, that are approaching retirement, find themselves more concerned in an election year than they typically do, especially with everything we've seen the last couple of years? That, hey, if you're really on the fence about making the call, now's the time to get with an advisor, right? Because if you're approaching retirement
absolutely.
and you're feeling nervous in this kind of volatility, from socioeconomic and economic and political and everything and geopolitical, it may be worthwhile to, finally pull that trigger and talk to somebody.
I mean, so approaching retirement, we've talked about this many, many times, but in approaching retirement, your strategy has to be different, right? You've got to have, from an investment standpoint, a different strategy than what got you to retirement because you no longer have time, right? You don't have 10, 15, 20 years, 30 years of career ahead of you to ride through the ups and downs. And frankly, at the end of it, doesn't make a lot of difference.
Mm.
At this stage, now you're pulling from that account and spending those accounts down. Now it makes a big difference, but that doesn't mean everything should be conservative. The biggest concern I would have is somebody making those emotional decisions based on what they think might happen. Oh, it's a presidential election year, all this volatility. Harry Dent says it's going to crash. Let's go,
Right.
sit in
Right.
cash.
Let's move. Yeah.
Cash is paying me, I can get 4.5% in a savings account right now. So let's move it all to cash. There are pros and cons to that. Yeah, you know what you're getting. You're still not exceeding inflation, so you're falling behind. You're losing money there, even though it doesn't feel like it.
Right. Yeah.
So at the end of the day, don't make that emotional decision. Have a strategy. Work with an advisor. Have a plan built out. Know what you need to spend each year. Yeah, that piece, maybe take a different strategy, a different approach to that. We've talked about it many times. We bucketize the money. That's our soon bucket.
Yep.
We're spending from that. We don't have the risk and volatility in that bucket that we have in a later bucket. Later, we've got some time, right? So you can't take everything off the table because you don't know. No matter who tells you, oh, yeah, it's going to do this or that, they're all wrong.
Right.
I guarantee it's going to be somewhere between those ranges, probably, right? 33
Probably.
to 54.
Yeah. Probably.
It's a pretty broad range. It's like the weatherman, right? 50% chance of rain today or whatever it is. I mean, it's, they never get it right. So,
yeah, it's like and it's that time of the year where Puxatawny Phil. Speaking of Phil.
Right. Yeah, Puxatawny Phil is going to be trying to peek his head out.
He's never right? He's never right. So that's what you get for asking.
Have a plan is at the end of the day. We know this is going to happen. It happens all the time. This isn't anything new, right? Economies grow, they, expand, they contract. We have inflation, interest. I mean, all this plays in presidential elections. They happen every 4 years. I mean, it's all part of the process. We know we're going to have the volatility. Just make sure it's positioned in a way that's not going to hurt your plan and affect your plan. So
there you go. All right, folks. Well, that's the economy boom or bust. Some interesting headlines from some various different sources out there in the in the stratosphere, I suppose, in the econosphere. And so if you've got some questions, get yourself on the calendar with a person who does it every day. There's obviously always the talking heads. We're talking heads right now too, but Phil's also in the trenches because he's serving clients, and he is a fiduciary, and he is a CPA and a financial wealth specialist. So, just get yourself onto the counter, have a calendar. Not the counter. You don't want to be on the counter. You want to be on the calendar.
Not the calendar.
Get yourself on the calendar and have a great day and have a good conversation with Phil. We'll see you next time here on Phil's Tax Hacks and other retirement facts. Don't forget to subscribe to the podcast on Apple, Spotify, and YouTube.
Phil?
Investment advisory services offered through AFS Wealth Management. The content of this program is provided for informational purposes only and is not a solicitation or recommendation of any investment strategy. Investments and/or investment strategies involve risk, including the possible loss of principal. There is no assurance that any investment strategy will achieve its objectives.